Hey, it's time for a market update. So the last few years have been super crazy in the real estate market, as everybody has known. And I'm going to give you a recap of our local numbers, and then we're going to hit on some highlights and let you know what the experts are saying and what they're predicting for the rest of 2022. Hi, I'm Stephanie Souza-Breault with Modern Nest Realty, located here on the Central Coast of California. Over the past year, we have talked about the lack of inventory, the buyer fatigue, the mortgage rates, and the amount of home equity people have in their homes. Now we're going to be shifting gears and be talking about the increased interest rates, the market shifts, the longer days on the market, and a more normalized market. So first, let's take a look at the Orcutt area recap for last month. Orcutt had 21% increase in price, with the average price for May came in at $627,000. 38 homes were sold in May, and that was a 28.30% decrease compared to May of 2021. We're still short on inventory for the continued buyer demand. However, with the increased rates increasing at such a fast pace, we are seeing a major slowdown in the last couple of weeks on the actual buyer demand. So the market has been starting to shift, and I'm sure that we're going to review June's numbers here in a few weeks, and we're going to see the reflection of that actual market shift that's happening now. So for the Santa Maria recap, the average home price in Santa Maria ended up being $579,000 for the month of May, which was a 26% increase over 2021. An interesting fact for the Santa Maria area is the days on the market. May 2021, the days were running at 12 days average, and in May 2022, we experienced a 22-day average for days on the market. So in summary, for the Santa Maria Valley, prices are still up, still limited on inventory. However, with the increase of the interest rates, it's creating a market shift and a little bit slower of a pace for home sales. So now let's switching gears to look at the national outlook for the housing market overall. Sam Cater, chief economist, said this: mortgage rates continue to inch downward this week, but are still significantly higher than last year, affecting affordability and purchase demand. Heading into the summer, the potential home buyer pool has shrunk and supply is on the rise, and the housing market is normalizing. This is welcome news following an unprecedented market tightness over the last couple of years. In December 2021, we were sitting at a 3.1% interest rate, and over the following months, we have gone up to between the 5 and 6% range. Since April, we have seen a bit of a plateau, which is a good thing because, as we know, the higher the interest rates go, it cuts into the affordability and eats into the purchasing power that buyers need to actually get in the homes. So no one has a crystal ball, and we don't know exactly where we're going to end up with the interest rates or where they're going to go. However, our rates that we're seeing today are still competitive if you look at it in perspective to what we have seen over the last 50 years. Market shift, market correction, market crash. All of these things you're hearing all over the media today. A few facts to cover. A market correction, by definition, is a 10% decrease in pricing. As of now, we still do not have enough inventory for the demand, and the experts are still forecasting almost a 9% appreciation in the residential real estate this year. Normal has been about 3.8%, but in 2020 and 2021, obviously, that was way off the charts with like a 20+% increase in appreciation in home prices. With that said, we're still expecting a very healthy appreciation this year. Danielle Hell from Realtor.com stated it best: the housing market is at a turning point. We're at a turning point, and we're starting to see signs of a new direction. But the ball is still in the seller's court in most housing markets. So yes, things are starting to shift a bit, and it's moving to more of a normal market situation. We're expecting it to go to more of a pre-pandemic level demand. Not a pre-pandemic pricing, but more of a pre-pandemic demand before all the craziness started to take place in 2020. The Mortgage Bankers Association expects that potential home buyers may be more willing to re-enter the market once the rates hit some sort of stability. Some that backed out of the crazy housing market might have their chance to re-enter it again under a more digestible circumstance. Experts don't believe that the market is in a bubble or a crash like the Great Recession is going to happen. We had reached a housing shortage that had reached crisis proportions at a time when many millennials are reaching the age when they start consider home ownership. All of that factored into will likely keep the prices high. So the next topic is recession. Will we head into one? What will happen to home values if we head into a recession? Well, many people think every time we hit a recession, homes lose value, and that's simply not true. And we could use this graph here to show you the facts of what has been shown to us in history. A little perspective on the market from Shivani Peterson, who's a mortgage expert. If you're looking to buy a home, I would still recommend you do so, even at a higher interest rate, because we have no reason to believe that home prices will stop appreciating. Home values going up is only a problem if you're trying to buy. When you own, it's a gift. I think that's a pretty good perspective on the whole situation of the housing market and what we're experiencing today. When you own a home and prices are rising, that means equity. So those that have home ownership on their radar, this would still be a good time to purchase. So I hope this all gives you something a little bit to think about, and as always, I'm available to offer a free price opinion if you'd like to know what your house is worth, because the value has definitely changed over the past couple years and is still continuing to change today. And if you're looking to purchase, let's set up an appointment to chat about the market and your lending options so you know where you stand and where your opportunities are. Thank you for watching, and I hope that your summer is full of health, happiness, fun, and prosperity. Any questions, send me a message. I'm always here to help.